and welcome to another episode of your Retirement Planning Simplified. I'm your host, Joe Curry, and as usual, we would have Lindsay here, but Lindsay is not with me today as she's busy working on rehearsals for her upcoming play, Jim Watt's Girl Reporter. It's opening on August 1st at Fourth Line Theater. So any local listeners, be sure to check that out. So I'm going to try, it's been a long time since I've done one of these solo, but I'm going to try to get through this by myself today. And so what I thought we would talk about today is this idea that I don't think most people really know how to find a financial advisor. So the most popular search for financial advisors is financial advisor near me. So what I would invite you to consider is, does your financial advisor really need to be near you? I know, maybe even before COVID, that might be a reasonable start, someone near you. And maybe you do want to, be able to go and sit down with your advisor. So that is fair. But I feel like there's a few things that we should consider beyond just, are they near me, right? So we're going to talk about that today. But first, just talking about that ability to work on a virtual basis. So nowadays we have Zoom or Teams or Google Meet or many other options for meeting online. And so if you're watching this on YouTube, I mean, you can be getting your advisor just like this, looking through the camera. It's actually, in a lot of ways, it's easier to present some things virtually because we can just share documents, get them in front of everybody, as opposed to trying to have to work in a TV. So there's some advantages to that. We have DocuSign or other methods now to get signatures, so we don't need to do wet signatures. So those are definitely some things I want to make sure you're keeping in mind if you are looking for a financial advisor. Now, what are other ways that you could find a financial advisor other than searching for a financial advisor near me? You could reach out to friends and family to see if you know anyone who's had a good experience, because sometimes getting that word of mouth is a lot better than randomly finding somebody over the internet. You could search for financial advisors and look at the content that they're putting out. So a lot of financial advisors will put out content. Obviously, we have the podcast. We have some stuff on YouTube. Our retirementplanningsimplified.ca website, we have some blogs on there. So you could read through some of that content and just start to get an idea of, first of all, hey, do I think this person knows what they're talking about based on what they're putting out there? And also, does what they're putting out, does it resonate with me? Do I feel like that style is gonna work for me? So you can have a pretty good idea about what an advisor's going to be recommending and how they're going to be working with you before you ever even meet them, which is a big advantage today over the past. You can also look for testimonials. Are their clients going out and willing to speak highly about their advisor? You can look on Google reviews. I know most of our testimonials are on Google reviews. If you look up Matthews and Associates, excuse me. So there's different things that you want to look at. Now, not all financial advisors or financial planners are the same. So it's important to know what you should be getting from an advisor or a planner before you make a decision on one, right? So while they're not all the same, it is sometimes hard to differentiate between them. Regulators have recently in Ontario tried to put in place a title reform so that we could get some more consistency on who could call themselves a financial planner and who can call themselves a financial advisor. Unfortunately, though, through lobbying, it seems as though the rule hasn't really helped. All it's done is made kind of even the simplest designations are allowing people to call themselves advisors. So it really hasn't solved anything, unfortunately. So what are some things that you might want to look at before you even schedule a meeting? For most people, the main designation, if you're looking for financial planning, is going to be CFP, Certified Financial Planning Professional. Again, reading through their content creation, just getting an idea what are they talking about. If all they're talking about is beating the market with their investment strategy, I would maybe steer clear of that. Are they talking about planning, though, and setting goals and kind of all the bigger picture things? Are they looking at comprehensive planning, different topics, again, or is it all just investment centered? And then are they a generalist or a specialist? So it's not to say a generalist can't be a good financial planner, because I know there are a lot of generalist financial planners who are quite good. But typically speaking, if you can find a specialist, someone who really works in the area where you are, that's probably going to be a good sign that you're going to get more specialized advice, right? So it is really hard to be all things to all people. So for us, for example, I mean, we're working with people a few years out from retirement, helping them transition into retirement, and then making sure that they are taken care of through retirement. We're also helping the business owners, again, make sure they get their business ready to be able to transition to that work optional life for retirement. So if you are looking for college planning or first time home savings accounts, things like that, we're not going to be the person for that. And I'd be the first one to tell you that, right? So, someone is in their 30s calling up looking for that kind of advice. We have other planners that we would actually refer those clients to because we know where we're good and we know where we're not the best. So that's something to keep in mind as well. Now, let's talk a little bit about financial planning versus just investment management. And I think that, one of the first questions a lot of people want to ask when they come to a financial planner, financial advisor, or investment advisor is, how much do you charge? And so leading with that question, and I'll back up maybe, that is an important question. You do obviously want to know what you're paying, and your advisor should be transparent about that. But on the same hand, leading with that question is kind of like going to a car dealership blindfolded, not knowing what dealership it is, not knowing what car, what model you're going to get, and just asking how much is it going to cost for the new vehicle. It doesn't really make sense, right? Because we can get vehicles used from $1,500 to new vehicles for over $500,000. So just asking the price on a car is the same as that you don't know, is the same as asking a financial planner how much they charge if you don't know what they're doing, right? So, excuse me. So when you are thinking about fees, though, you know what your fees are. It's really you're evaluating that based on what you're getting, right? So there's a lot of people who are going to do investment advice only and charge the same amount that someone else is going to charge to do investment advice plus comprehensive financial planning, right? And sometimes that comprehensive financial planning might be a little bit more, but if it's a little bit more than someone just giving you investment advice, it's probably worth paying a little bit more because you're going to get a lot more out of it, right? So you really want to make sure you're thinking about that. Now, here's some scenarios that we run into with potential clients coming in to meet with us. So one is recently we had someone, she was a good planner. She'd done a great job preparing for retirement. But when she came to meet with us, she told us that her advisor had told her that she does not even pay any fees. So unfortunately, that's not the first time that I've heard that. And so it's really important to understand, no matter who you're working with, that you are paying one way or another, you're paying. So if someone's telling you that you're not paying for advice or investment management, then you probably want to steer clear because it's just not the truth and you don't have a transparent relationship. Now, another situation that we often see is we have some people who will find us because of the podcast or content we're putting out, and they know we're focusing on this retirement planning piece. And so they'll come to us with the idea that we're going to help them do their financial planning, and then they'll keep the investment advisor that they've had for the last 10 or 20 or 30 years, which is okay. We do offer flat fee financial planning. But when we look at almost every time we look at what the potential client is paying their investment advisor, it's exactly what we would be charging to take care of all their planning and their investment management. So again, that's where we want to make sure you're clear on what you're actually paying for and what you're getting for that. All right. Now, let's just talk a little bit more about this in investment management versus comprehensive financial planning. So the typical experience that most people have with an advisor is that the advisor is maybe doing a little bit of retirement projections, so to speak. And then they're setting up a portfolio, and then hopefully they're doing an annual review at the very least. And the majority of that conversation is all centered around some market commentary on the portfolio. Now, that is unfortunately the typical scenario, but there is another scenario out there. So as I mentioned, for quite often the exact same price, sometimes even less, you can get comprehensive financial planning. And comprehensive financial planning is much more valuable than investment management. Investment management nowadays is almost getting to the point where it's a bit of a commodity, right? So you don't need to pay full price of planning to get investment management. And comprehensive planning is going to look at things like your cash flow and your emergency funding. It's going to look at estate planning and implementation around that. Risk management, which is a fancy way of saying insurance planning. Tax strategy should be considered. Retirement income planning. So not a retirement projection, but how are we turning your life savings into an income stream? And again, tying that to your tax strategy to make sure we're limiting your lifetime taxes. And then, of course, there is the investment piece of that, which helps drive it. But that investment planning is one tool in the bigger picture, right? And so all of this also needs to be centered around your goals, around your values. And planning is a process. It's not a one-time event. It's not something you just walk in, you do it one time and it's done, right? So it needs to continually be updated to stay in line with your current situation. Okay, so hopefully that gives you a little bit better of an idea. So if you're sitting here listening to this and you're thinking, well, in the last 10 years, I've had 10 meetings, and every one of those meetings, we just talked about what my investments are doing. You might want to think about whether you're getting value from that relationship. Okay. Now, if we talk again a little bit more about investment philosophy and what to look for in someone giving investment advice, one of the things that you can ask, again, before you start asking about fees, you probably want to ask, do you have an investment philosophy? Right. And I bet you that a lot of people you talk to aren't even going to be able to answer that in a concise way. They'll talk about maybe how they can beat the market and the strategies they have that are, proprietary and all these kind of things. But at the end of the day, they should be able to just give you a very basic answer. So for us, if you ask what our investment philosophy is, we would just tell you that we follow an evidence-based investment philosophy. So now you might think that would be commonplace. Following what the evidence tells us is going to help us be most successful. But if we think about, and we compare this to medicine, for example, it wasn't that long ago that evidence-based medicine was not the norm, right? So obviously science has come a long way. And if you're working with a doctor today, you would expect that they're going to follow evidence-based practices, right? You don't want your heart surgeon to come in and say he read an article in a magazine that week on a new way to perform heart surgery, and he's going to try it out on you today. Like you wouldn't expect that. But unfortunately, most investment advice in Canada is actually more based on active management. And the evidence is very clear that that's a losing proposition in most cases, right? But again, at the very least, you want to make sure that there is a investment philosophy that someone's following rather than kind of flavor of the week. Okay. Now, the problem and the reason that I believe that people often don't use evidence-based investment philosophies is that it's a lot harder to sell. Because if you come in and you talk to me and you are asking me about investments, you want to hear that I know where the economy is going and that I know what's trending, what the best stocks are going to be to get into right now, and that I have a system for getting you out of the market before it crashes and knowing when that next big market crash is going to come. I mean, that's the reality of what people want to hear. And active management essentially is trying to do that. But at the end of the day, if someone is telling you and giving you those answers you want to hear about investments, I would say run, because nobody knows those answers. And that's not just me saying that. There's some very clear evidence around that. And we'll put a link in the show notes to the SPIVA, SPIVA website, where you can actually see how active portfolio managers are doing just versus the index. So what the actual markets are doing. And the results might be kind of surprising. Now, I have another thing that I've seen from time to time, or questions I get is, well, I think I'm going to give you part of my portfolio and we'll see how it does. And I'm going to give, I'll keep another part with my other advisor, or I'm going to try with this other advisor. And so I heard someone else say this, I think it was Barry Ritholtz, but that's probably one of the dumbest things you could do. And I don't mean to be too obnoxious there, or off-putting, but if you think about that, if you give me some money and you give another advisor some money and you basically tell them, look, whoever gets the best returns is who's going to get all my money in the long term, then you're just asking them to take a bunch of risk with your money to try to get the highest payoff. And if it doesn't work out, well, they weren't going to get it anyway if you had a low return. So it's more skin off of your back than it is off of theirs. Okay. So I'm not saying that I would do that, but essentially, if you came to me and said that you wanted me to do a piece of it, I would just tell you it's not in your best interest, and we probably wouldn't move forward. But advisor diversification is not helpful for your financial planning. So that's something to keep in mind, even though I know a lot of high net worth people think that they need to have multiple advisors. But you should have one quarterback kind of driving the whole thing. Okay. Now, what about experience? When you're looking for an advisor, how important is experience? So, unfortunately, some things can only be learned through doing. Experience is important for better understanding your situation, helping you make tough decisions. You want to know, as the advisor that you're talking to, have they worked with other clients in similar situations to you? Maybe if you know you have certain transitions coming up, you could even ask how would they handle those transitions? How have they done that in the past to get an idea? Now, unfortunately, in our industry, the way that recruitment typically happens is we have insurance companies or banks recruiting people and just kind of throwing them into the fire and saying, figure it out as you go. It's unfortunate, but it is kind of the way that it has always been. It is kind of the way that it really is today. Well, things are starting to change. We're starting to see more firms now who, like an accounting firm, are starting to hire junior associate advisors. They're mentoring them, and it's almost more like an apprenticeship where they're starting to come up through the ranks with the senior advisor to learn before they're fully responsible for client portfolios and client planning, which is great. So if you're looking for continuity in your planning and you want to know that even if something happens to the advisor that you start with, that you're still going to be taken care of, you want to try to find firms who are following that philosophy of bringing junior advisors in and not just throwing them in to take over a bunch of clients and give advice, but actually having them go through working with and mentoring under that senior advisor. So they're getting real experience before you're actually working with them. Now, what about licensing? So you want to make sure you understand what your advisor is licensed to sell, because if your advisor is only licensed to sell insurance products, so they're insurance licensed only, then naturally they're going to sell you insurance products, right? So they're going to sell segregated funds and they're going to tell you why that's the best option for you. But at the end of the day, it's the best option for them because that's all they can sell, right? Or can they only do mutual funds versus being able to do stocks or ETFs or other options, right? So there's a difference between advisors who are doing a mutual fund only or insurance only versus advisors who can do stocks or ETFs or mutual funds or seg funds. So for example, in our firm, and if you're an active listener of the show, you'll know we recently had Mark McGrath on and talked about seg funds and why they're probably not all they're cracked up to be, or not all the way some other people want to make them seem to be. But we are still licensed to sell seg funds. So we're insurance licensed and security licensed. So we can do insurance products. We can do mutual funds. We can do ETFs. We can do stocks, right? So at the end of the day, you want to, again, make sure that whoever you're working with is able to provide the products that you're going to need to fulfill your financial plan, whatever tools are going to be needed to give you the best chance of fulfilling your goals and the plan. You want to make sure that's an option and you're not just being sold something because it's the only thing they can sell. Another thing you can do when you know what they're licensed in and what their regulator is, because it's something you might want to ask, you can go to the regulator's websites and you can look and see if the advisor has any complaints against them, if they've ever been disciplined because of any kind of practices that were not up to standards. So that's something that, it's an easy thing you can go in and check. And the other thing is, if you can go in and confirm someone is licensed and they're regulated, then you also will have a lot more confidence that you're not going to be walking into some kind of Ponzi scheme or something like that, right? Because you know that they are regulated. If they're regulated, that means that their dealers are potentially the regulator. Someone's doing audits on them to make sure that they're following proper practices. Okay. And the last thing I want to talk about is, what kind of communication should you expect from your advisor or your advisory team? I think the standard in the past has always been like an annual review. And for one-on-one, maybe that's enough. But you also want to know, what other modes of communication can you expect? And what if something happens that affects your situation, but you weren't scheduled for your annual review? Are you getting contacted? So those are the kind of things you also want to ask about what that looks like. An advisor should be able to tell you, if they have a process, kind of what that looks like. So for example, for us, if you've gone through our financial planning process and onboarding, and now you're an ongoing client, we're going to be looking to see you every spring and every fall. We're going to check in January. We're going to send you out a tax package to make sure you have all your tax documents together. We're going to send out 4 newsletters to our clients, so quarterly every year. We're going to do at least 4 quarterly appreciation and education events for our clients. And we're going to put out timely information. So if something changes in the budget that you need to know about, if there's some kind of tax change you need to know about, we're going to make sure that we're communicating that. And if it's something that's specifically affecting you, we're going to reach out personally to make sure that we're on top of that. Beyond our regular meeting times, we're always available as emergencies or life changes, things come up, to make sure we can take care of our clients. So again, that's an example of what that might look like. It doesn't mean if someone looks different than that, it's wrong, but just, again, there should be a process, some way that you have confidence, that you're going to be it's kind of in the know what's going on with your advisor, and making sure that things are getting updated for your situation as your life changes, or as things around you like taxes or whatever else changes. So I went on a lot. I know I talked a lot about our processes and some of the things that we do, but that's kind of to give you an example of hopefully what you're already getting, or if you are looking for an advisor, some questions that you could be asking. Because again, we get a lot of inquiries to start with, what are your fees, or do you sell stocks, or what's your investment track record? So it's fine to ask these kind of questions, but again, being armed with the information of kind of what the relationship and the service should look like should help you as you try to figure out what your next steps are for your retirement planning. So anyway, I thank you for sticking with me to the end of this. Again, I'm kind of rambling through without Lindsay here. I feel like I've lost my flow a little bit, but anyway, I'm excited to have her back, hopefully on the next episode. And until next time, take care.
Thank you for joining us for this latest episode of Your Retirement Planning Simplified. Be sure to tune back in for the next episode. And until then, we're here to help you simplify and succeed in your retirement planning.